This is not financial advice. I'm recording my thoughts about Tesla stock. Tesla just reported their Q2 2023 results and they were disappointing. They are better than expected, but they are definitely disappointing. The stock has reacted to this and it's down about 10%. The stock is currently trading at about $265 with a market cap of about $830 billion. In this video, I'm going to give my opinion on whether Tesla is a buy, hold, or a sell at $265. In full disclosure, I do own Tesla at an average price of about $120. Let's look at its most recent quarter earnings. As you can see on the screen, the total automotive revenues are about $21 billion and the total revenues are about $24 billion. So the auto revenue represents about 90% of the total revenue. Energy generation, storage, and services and other revenue represent about 10%, which is not too significant at the moment. Gross margin of 18.2% is the lowest it has been in the past 5 quarters, and Tesla has said that they would never go below 20% gross margin, and here we are at 18.2%, and that's definitely disappointing. And on top of that, the operating margin is less than 10% for the first time. Last quarter it was at 11.4% and we thought it was bad, and now it's at 9.6%. If the operating margin is at 9.6%, by the time we get to the net profit margin, it would even be less, right? So it's not a good sign at all. Cash equivalents and investments are about $23 billion, so Tesla has got a healthy balance sheet. Let's look at a bit more into their income statement. As you can see on the screen, the total revenue is about $24.9 billion. Gross profit is about $4.5 billion. It's about 18%, as I said before. The operating income is 9%, in other words, $2.4 billion. After the operating income, there was interest income of $238 million. We are in a high interest rate environment and Tesla has got a lot of cash. So they have interest income, which is adding to the operating income. And then there is a one-time charge of other income, $328 million. That's also adding to the bottom line, but it's not going to be there next quarter, right? So it's a one-time charge. So overall, the net income is about $2.7 billion. With respect to the number of outstanding shares, Tesla is not diluting the shareholders at all. If you look into the screen, 3.46 billion a year ago and currently they're at 3.47 billion. So the share count is flat. I'll now do a valuation of Tesla stock in 2027 to determine whether $260 stock price is a buy, hold, or a sell. In 2022, we all know that Tesla made about $81 billion of revenue, and this year they are on track to get to about $110 billion of revenue. I'm estimating 30% growth rate with respect to revenue. We do know they are growing 50% year on year with respect to vehicle deliveries, but the price per vehicle has reduced, right? That's why the revenue is not growing at 50%. Only the deliveries are growing at 50%. So 30% revenue growth in the next 5 years would get them $300 billion of revenue in 2027. Tesla is launching the Cybertruck and we will have some subscription service for the FSD, and we will also see more gigafactories coming online in the next few years. So I think $300 billion of revenue in 2027 is achievable. It may be less or more, but I think $300 billion of revenue is a very good estimate. With respect to net profit margin, currently their operating income is 9%. So the net profit margin in reality would be less than that because they have to pay taxes on the operating income. But I'm estimating 15% net profit margin, which converts to about 30% gross margin, because the high interest rate environment is not going to last and Tesla will increase their prices once the macroeconomic conditions get better and get back to that 30% gross margin territory. If they cannot, then it's going to be a disaster, but I'm counting on Tesla that they can get back to 30% gross margins and 15% net profit margins. With that, they can make about $45 billion of net income in 2027. With respect to multiples, I have assumed 20, 30, and 40 multiple. The 20 multiple will happen when people think that Tesla is just an automobile company even in 2027. It will happen if the revenue majority comes from the automotive sector itself, like what's happening right now. You cannot call a company a software company or AI company when 90% of its revenue is coming from the automotive sales, right? So if that is the case with Tesla, in my opinion, that is the case. That's what I believe, because FSD is a very complicated problem to solve. There are infinite number of edge cases. There are regulatory issues, and even if there is one single accident, the entire fleet is going to get grounded, and we are dealing with human life here. So I don't think FSD will be a reality even in 2035. And energy business, I think it will grow, but it should not represent a significant piece of the revenues for Tesla even in 2027. So with 20 multiple, there would be about $0.9 trillion of market cap in 2027. I'm assuming that the number of outstanding shares will not change in the next 5 years. They're going to stay at 3.468 billion. With that, the stock price would be about $260. That's no gain from $260 stock price right now. So that's not a compelling case. Now let's move on to the multiple of 30. People will apply this multiple of 30 if they see decent amount of software revenue with respect to FSD's autopilot. For example, people will pay about $10 a month subscription fee to utilize some of the features of FSD like autopilot, right? The 30 multiple also assumes that the energy storage and services revenue will be significant. So with 30 multiple, the market cap would be about $1.35 trillion, which would convert to about $390 stock price. So that's about 50% gain from the current price of $260. And 50% gain in 5 years, it's not so great, right? Now let's move on to the 40 multiple. And this is the scenario where Tesla will still remain a hype company. Even in 2027, people would pay a much higher multiple than what it deserves. So in that case, the 2027 market cap would be about $1.8 trillion. With that, the stock price in 2027 would be about $520, which represents 100% gain from the current $260. But I think it's very, very optimistic case, and therefore I'm not going to count on it. In conclusion, I'm not seeing a good risk reward when the price is at $260 for Tesla. So I'm not going to touch Tesla stock when it's at $260. As mentioned in multiple videos of mine before, I will continue to buy Tesla as long as it stays below $200, and that's where I see good risk reward. Let me know your thoughts in the comments. Thank you so much for watching.